Oh, thank you for the heads up. Hopefully there's sound now. I had the microphone on mute, so I'm gonna have to redo the the introduction here. Good heads up there. Good heads up. Thank you for throwing that out there. Once again, just wanted to recap what I had been talking about a minute ago. The theme for today here is that the dollar is trading near the lows. The idea here is that the dollar index futures, let me go ahead and show some of our charts here. Again, if we look at the weekly charts, the idea is that the dollar index futures is trading near the lows, but the problem is that we are still inside of last week's trading range. Again, if we were sitting there looking at last week's trading range, going back to the euro basically did what we were talking about last week, where it held, it's doing what we were talking about last session in terms of holding above the low of last week. The pound dollar able to break above last week's trading range. You can see we're taking out the highs there, trading right now at 130.60. And again, the Australian dollar and the New Zealand dollar right now at the very least are off of their lows as well. The one thing to pay attention to is that the dollar is on the lows, but the Japanese yen continues to show the strength for today's trading session. So at this point here, I'm watching this Japanese yen. It is still in yesterday's trading range here, but it is looking to possibly get above last week's high at 111.75, currently trading at 111.50. I'm watching there to see if we can get a breakout above last week's session. The interesting thing is that although the dollar is on the lows, we do have strength relatively in the Japanese yen. Okay, the Swiss franc, which was showing strength yesterday, is falling back now. One thing to pay attention to is unable to get above last week's high, so that's pretty important. We're still trading in last week's trading range. Still trading in last week's trading range here in the Canadian dollar as well. So once again, I want to say good morning to everybody out there. Here's the thing that I'm looking at, of course, back to what we were talking about with the dollar index futures. This is the 4-hour chart, and if you remember from the previous trading session, we were actually trading right here at this trend line. Okay, so at about this time yesterday, we were literally at this trend line, and ever since then the market was able to find the sellers and basically started to trade on its lows, continuing to move throughout the day on its lows, and then ultimately over the past couple of hours we've been able to reach this lower level of support. So right now I'm very interested in finding out what the dollar is going to do at this level here. You can see this rising trend line that's going back to the 28th of August. And so what I want to say, what I want to focus on here is that if the dollar can hold right at this trend line, then that's going to set up something that we can look forward to trading for the rest of the day. Again, where the anticipation is of a breakout of this trend line, but then again, we have a lot of data that we should probably be anticipating for the week. So let's go ahead and take a quick look at the data that we can expect here for the week. No, what I do is go simply over to Forex Factory. A lot of times the calendar that you get from Forex Factory has a lot of gobbledygook, or what I like to say is that it has a lot of excess information on it that to me is really irrelevant. I'm not saying that it's unimportant, but what I am saying, well, I guess I am saying it's unimportant. It's just a lot of stuff that I really don't pay attention to. So this right here is an image of let's go and take a quick look here at the calendar. What I do on the calendar, okay, so what you probably are going to notice is that I do not take a look at anything other than the red most important events for the week. Okay, so the only thing that we have coming up today is the average earnings index from London. So what I typically will do is I'll go up here to the you can see this little icon up here that says this is basically your filter. So once I go and tap on the filter, I make sure that everything is checked here. I don't mind everything being checked, but the difference that I employ is that I get rid of the mediocre and the unimportant event. So the only thing that I leave up here is the red most important event, just because everything else to me is in my opinion probably not as important as these. In other words, like, these are the ones that I need to make sure to be careful putting trades on if they're within 15 minutes from where we are. In other words, I don't typically like to enter into trades 15 minutes ahead of those releases. Again, forexfactory.com/calendar.php is the URL there, the page URL. Once again, looking at this dollar index, you can see on the daily chart that we're pretty much at the lower end of this channel. And most importantly, I got to emphasize the idea that we are back below key moving average on the 4-hour time frame. Is basically just the 50 period moving average. And then if you look at the 60 period moving or the 60-minute chart, we are below the 50 period moving average on that time frame as well. Same thing on the 15-minute chart. 15-minute chart, we are down below the 50 period moving average on this time frame as well. So the emphasis here is that it looks like we are in an environment where this market looks like it wants to go lower, but again, I'm looking for a breakout today of this triangle here. You can see that we are at the lower end of this trading range, so that to me is going to be vital for us to pay attention to. Looking around on my charts, this is a point and figure chart here. The euro has been able to hold some pretty decent trend lines down here. This lower left hand corner chart is showing me that we've bounced, or we're creating lower trend lines off of a support here. So going back to 2017, you can see this trend line just beneath us, but actually we are still holding above that. And then here we are. This is a 60-minute chart over on the right. You can see this blue column here is showing the rejection that we got off of the low at 115.24 was the low for yesterday. So I'm looking for more strength, any kind of a pullback into 115.60. So 115.60 right now is a pretty important level, in my opinion. 114.50 or 115.50 in this area, which is the lower end of these columns. I could probably go into some more point and figure charts, but for the most part, we'll talk about that a little bit later. Trying to look around to gain an understanding here of anything that could be jumping out at me, and I should probably be emphasizing the fact that the euro has been trading very nicely for us today, showing strength here. You had a couple of opportunities, in my opinion, already. So I think that this test of the 50 period moving average on the 5-minute chart was a pretty good opportunity to get long the euro. And then the pound dollar, even though the euro and the pound are, oh, here we are, look at the pound. It looks like we're at a fresh entry level. Okay, but I need to wait for the momentum to actually start to turn around. Right now, although the pound is showing that it's at support at the 50-period moving average, you don't just want to jump in. So that's what I'm waiting for, is to see if this market can actually start to reverse the momentum, and then that'll give me an opportunity to test the long side. But the other thing is that it looks like the leader of the group at this point is the euro yen. You have the euro yen trading right around 0.6%, and I think that that's probably going to be the better place to trade for today. You can see here that every time that it's come near the 50-period moving average on the 5-minute chart, it's been respectful. So that's where I'm kind of focusing my attention. Okay, so right now the strong, you have the strongest pairs being the euro pound, or the euro yen, the pound yen, the CAD yen, the Aussie yen, and the Swiss yen. So at this point, I'm looking to see if I can get involved here on the euro yen to see if it will actually give me more opportunity to push back up to 130. You can see that we're right about 129.60, so that's actually pretty decent opportunity. Okay, so right now we're looks like we're pulling back. You can see that the market came up and ran into resistance right around 129.79, and it looks like the market is using the London session open as a reason to actually take profits, but we'll have to just be patient with it. If you were at your desk a couple of hours ago, that might have given you a great opportunity to get positioned, and right now you're actually probably taking profits. I'm just logging into some of my software here, trying to log into some of my trading platforms. Okay, so once again, looks like the dollar index is down almost 0.2%. You also have the Canadian dollar down 0.2%. You have the Swiss franc down 0.1%, and this is what I like to see in terms of confirmation that the dollar is going lower. As you all know, the emphasis that we like to trade is the major currency pairs. That is probably the backbone of what we like to do here. The best thing for us to do if we are struggling or if we're brand new is to focus on just a couple of different pairs. So I like to focus on the G8 majors. Here you got the dollar, the Swiss, the Canadian dollar, Japanese yen, euro, pound, Aussie, and New Zealand. And if you see here on the screen, you can see that this is the way that I have them actually. This is the way that I have them on the charts as well. So once we show you the dollar grid, then that'll give you a deeper understanding. The purpose of this is to actually hopefully get an understanding about what the dollar index futures is doing, or the dollar using the dollar as an anchor at the top left hand corner there, and then focusing on the currencies from that angle. So again, dollar is down in this particular scenario. Dollar is down today. So we want confirmation, and so I was looking at the Swiss franc, the Canadian, and the Japanese yen. The Swiss franc is down, the Canadian dollar is down. However, the Japanese yen is up. So that is what's holding the dollar up right now. It's helping the dollar float, if you will, to where the dollar is not completely collapsing. And then on the flip side, you have the Euro, Pound, Aussie, New Zealand, and those markets are actually finding strength, as you know, over the course of the day. Those markets have been able to break nicely. So again, simplifying the way that we trade currencies from an intermarket standpoint, I like to use the currency correlation to help me gain an understanding about what I can expect for the rest of these markets, and therefore that allows me to not have to hit my head against the wall when I'm trying to figure out what I want to do. So once again, another thing that I focus on is the percentage change in the markets. So as you'll see, on the left hand column here on the left side, I basically have the watch list that I pay attention to. Of course, when you for those of you that are familiar with currencies, you're already going to know this, but when you can look at the exchange rates of those various economies, then that gives you the possibility of trading 27 different currencies. Looks like the pound is actually doing something as we speak. Okay, so once again, nice little 20 point pop there off of the 200 period or the 50 period moving average on the 5-minute chart. So it looks like we're getting a nice little boost here. All right, so that was the data release that we were talking about a minute ago. Or was it not? Let's see here. No, still got about 2 hours, I think. Oops. That's not what I wanted to do. Oh yeah, it just came out. Okay, the average earnings index. Yep, just came out. So now you can understand what is helping boost the market. But so again, more upside coming in the pound. At least for right now, it looks like you're having a little bit of a boost. So if you're trading there, your stop is just beneath 130.50. One thing I love about trading based on charts is the fact that we don't have to actually know what's moving the market. Okay, we just focus primarily on what the chart is telling us, and then that'll allow us to take advantage of the move. That's for sure. Okay, so keep an eye on that pound dollar. Looks like this is the place to be right now. Looks like the pound Aussie is another. Well, the pound Aussie might have been a couple minutes ago, but just looking at scanning the markets. I'll take a quick picture of what I'm seeing on one of my other screens. I'm unable to actually share the other screen that I'm looking at, but here's what I'll show. I'll bring in a quick picture. Now it looks like the the pound yen is showing some nice move. See the difference between the okay, so a pound yen had a nice, it's basically 20 pips off of that 50 period moving average as well, but you can see that you had a nice push off of the 50 period moving average. So I'm liking what I see here in the pound yen. I'm liking what I'm seeing in the Japanese or the pound dollar. Okay, so that's probably where I would be focusing my attention right now. You have a nice little breakout of this trend line, just to give you a little confirmation here in the pound, right? So if you're looking at your 5-minute chart and you take this last high, okay, you had a nice little breakout of this trend line. And then of course, if you also look at it in the pound yen, the pound yen did it too. Okay, so this is a nice little confirmation that right now it looks like we're actually showing strength, but okay, we got to be really careful that this market doesn't fake us out. And I haven't really looked at the pound yen on the higher time frame so far, but I'll have to talk a little bit more about that in a minute. All right. Got an interesting question there. I wanted to talk a little bit about, but before we talk about this question, I want to show you here. This is what allows me to gain an insight into what the big boys are doing. Okay, so what I like to do, or what you should do, which you should consider taking a look at, is when you actually you should always have a nice little a percentage change list of what's going on, where it automatically sorts what you're doing. Okay, so this right here, as you can see, is a list of all the currency pairs that we trade. When you put the list of your currency pairs, then you have it on a net change basis, and what you do is actually pay attention to the ones that are the strongest and the ones that are the weakest. We don't pay attention to any of the pairs that are actually in the middle of the spectrum. So as you can see, this is why I'm really focusing right now on the pound yen, on the euro yen, the CAD yen, the Swiss yen, Aussie yen, New Zealand yen. What this tells me right now is that all the yen pairs are showing strength, which to me gives me the insight that there's a high likelihood that the Japanese yen, from a structural standpoint, is actually building strength. Okay, so we want to be focusing on the Japanese yen, not necessarily the pound dollar, but the pound dollar is showing strength too. You can see here that the strongest pairs are at the in the pound. You can see also that the dollar, the Canadian, Swiss franc are all on the lows here, so that's confirming another thing that we're looking at in terms of looking at our dollar grid there. So just a quick question here thrown that we want to talk about. The question that is being posed is, do you think trading is becoming more mathematical rather than charting? The big boys using expensive mathematical algos and clever maths retail traders doing it in Excel. There's always that component out there that computers are trying to take over, or trying to push their way into the markets. But you have to also understand that there are two things that that keep the computers from actually taking over. One is that the algorithms that are created for those computers are created by humans. And humans always respond in a certain way to certain stimuli. So no matter what, we can always guarantee that the psychology of the market is going to be predicated on how humans react to the market. And therefore, there's always going to be a a certain amount of fallibility with these algorithms. Okay, so the algorithms are not 100%. They're not 100% guaranteed, even for the people that are some of the best programmers out there. There are two things also. One is that you have a trader who comes up with an idea, and then they do not know they do not know how to program it into the computer. So they go and hire a programmer, and the programmer doesn't know any much about trading. So the fact that there's a disconnect between the actual trader and the programmer is what helps these algorithms become a little bit less than perfect. Yeah, you do have people that are actual traders who can actually go and program, but at the end of the day, they're just throwing darts at the wall too. They're not necessarily able to create millions and millions of dollars just by trading and then going out there and throwing it into a program. It's not entirely efficient the way things work. The other component is that the idea here is at the end of the day, you have humans who will react to stimuli in a certain way, and so most importantly, charts are the way to understand how the participants are reacted to the market. So bottom line is that the chart is a way to gain an insight into human behavior and human psychology. So even though we trade the charts, people like to say that we're behavioral analysts. We are trading based on human psychology, because this is a representation of the psychology of the market. So again, one of the focuses when you're looking at a chart is really you are looking at the dynamics of human interaction based on, I guess you could always say it boils down to fear and greed, but the most important thing to emphasize is that this is a true representation of what the market as a whole is thinking. And all we're doing is trading trends. So we're not really getting involved in like indicators or anything more than just trading the trend. The statistics show that if you trade the trend, then you have a very high likelihood of success. So that's what we'll do, is just try to ride the trend as long as possible. I love the input that I'm getting right here. It says, thank you for the comment. In the old days, we looked for chart patterns. I doubt anyone at Goldman Sachs even knows what dark cloud or hanging man chart patterns are. And that is exactly right. But I can tell you that everybody and their mother knows what a trend is. And so right now, we don't necessarily care so much for patterns in general. Esoteric patterns that people may get tied up on are a little bit more advanced, and therefore what I'd like to do is oversimplify it and only focus on higher highs and higher lows until they actually change from there. So most important thing to do is focus on the trend, and that's predominantly what we'll actually be focusing on. We're not necessarily going to be focusing on patterns. However, I will bring them forward, because patterns do show themselves and they do give us an insight. But most important to me is being able to identify the trend, capture the trend, and then ride along with the trend. That's about it. So if we can actually find those turning points, that's great. But the most important thing that I would emphasize, the most important thing for a technical trader, or any trader for that matter, is to identify the trend as quickly as possible, and then try to get in as early as possible, and then basically try to ride it as long as possible, and then try to get out before it actually turns. It's not more about levels now. Levels per se, I would not say necessarily levels. However, yes, support and resistance are the backbone of what I like to look at. Yes, levels are way up there on the list of my priorities. I definitely love to pay attention to levels because, again, levels, in my opinion, represent where the market or where the major players were taking action. And so this is why what I'll look at, for instance, yesterday I was talking about what I like to look at are the weekly levels. And most importantly, I'll take a look at last week's high and last week's low. Those are very important levels because over the previous week, they showed me where the major institutions were actually taking action. So at the very top of my priority list are levels. I love to pay attention to support and resistance because at the end of the day, that's probably the easiest thing for me to identify is support and resistance. And if I can actually identify support and resistance first, then what I'll do is trade the flow of orders, the order flow based on those levels. So I love breakout trades. Breakouts are really simple ways to trade the market. You can see here that we're looking at the British pound and we are above last week's high. So if you would have been paying attention to the last week's high, you can actually take a look at trading at, you might have gotten involved at 130.30, and here you're already up about 40-45 pips. Remember yesterday, the emphasis that we were looking at was actually trading. This was the whole basis of yesterday's broadcast, was that we came down to the previous week's low in the pound and the euro, and then we held the low here, and then we've been shooting up ever since. Okay, so at this point we held last week's low. We've been rallying ever since, and now the market is poised to actually take out last week's high. And so this is really important because what we're seeing here is a minor uptrend, right? You have the low down here from the 17th of August. You had a push up off the low, and then you had a retracement, and now we're poised, we're setting up for the next move to the upside. Okay, so at the very least, I love levels. Levels to me allow me to gain an insight for tradable opportunities or places where I might actually take action in the market. And from a scalping standpoint, they're probably the best way of deciphering trades scenarios that we could take an advantage of. If you're under market structure, high lows, then you're more halfway there. I agree. The comment was talking about if you're under market structure, a higher high, higher low, lower high, lower low, then you're more than halfway there. And quite frankly, like I was talking about a minute ago, there are, if you go look at all the commodity trading advisors, take a look at all the major funds, take a look at all the major players out there, they predominantly trade the trend. They do not trade mean reversion techniques. And by mean reversion techniques, I'm talking about reversal plays or looks like the euro just got smacked here. Or no, is that the pound? The pound just got smacked. Okay, what's going on here? Looks like a good thing we didn't get into the pound. So I'm looking at the dollar, and the dollar held that trend line. Okay, so the trend line actually is holding up nicely. Let's go take a look here. The pound just got smacked hard, right down to 130, using it as support. Okay, so thank goodness I did not get triggered into a trade there. In other words, like the actual setup that I used to get involved did not actually ever trigger me in. Okay, but it is telling me that I should go the opposite direction, but I'm not going to do anything with the erratic behavior that I'm seeing right now. Looks like the pound yen is probably the on my on my charts on the activity level, looks like that one actually got smacked too. 144.71. Okay. All right, so the dollar held that trend line. I think that's really what's what's driving this move here. All right, so I need to take a quick look here at the higher time frames. It doesn't look. Oh, the pound dollar came right down to the 60 period. The 50 on the 60. Okay, so 129.86 actually looks like pretty decent buying opportunity here in the pound. So that smackdown actually might have been a good opportunity to buy. So what I'll be doing is I'll be paying attention to see if this market can stabilize, and then give us a nice entry to the upside in the pound. At the end of the day, I love using moving averages because they kind of help me maintain a focus in terms of staying on the right side of the chart. Okay, so what we're looking at here is the this right here is the pound dollar, and like I was saying is that we came down to 129.86, and it looks like all we did was come down and test the 50 period moving average on the 60-minute chart. So right now this is my this is my low. As long as we can stay above the 129.85 area, I'll be looking for this market to stabilize and continue to move up. All right, so overlooking the 15. Okay, so this is the 15-minute chart. Looks like you washed right through the 50 there, but spike low right at the 50 on the 60. Here's the 50 on the 240. And you can see that the price is still above the 50 on the 240, so I want to continue to look long. I love the idea here of staying long in this market. Let's go take a quick look at the euro. Where did that spike low hit? Yes. Spike low hit the 15-minute. Looks like it hit the 15-minute 50 period moving average there. Alright, so 116.05 looks like my level. Trying to hold there. The emphasis though is if you go look at the daily chart, this right here is the daily chart of the euro. And the most important thing that I want to focus on here is that we're holding above my right shoulder low, which goes back to yesterday. Okay, so again, we were talking about this reverse head and shoulders formation, where the market came down, established a left shoulder here, established a right shoulder here, and then put in another head down here, and then a right shoulder over here, and then you had to break out. Came back down and tested the right shoulder. And I was telling folks this weekend, get into a conference call, that if we go down below the right shoulder, then that will invalidate my trading idea. But we came down to the right shoulder low and actually held it. So I want to be very clear that if we can stay above this 115.22, which was yesterday's low, that I believe that we'll continue to reach higher, and my target is at 119.66. Okay, so the measured move based on this pattern here takes me all the way up to 119.66. So I'm looking for higher highs and higher lows. Now, going back to what we were emphasizing about patterns and stuff like that, we can ignore the idea that we're looking at a pattern and just consider it an uptrend if we want to. We have a low and a higher low. We have a high and a higher high, and now I'm looking for another high. The other thing that we can take a look at here is breaking out of a trend line. So that's another indication of strength that I'll be looking for, is a break above this trend line here. Okay, so it looks like we got a nice little response there at 130 on the pound. We got a nice response there at 116 in the euro. I'm thinking that you know, that was a nice little shakeout. And you can see here on the 240 on the euro, we're above the 50. You can see here on the 60-minute chart, we're above the 50 period moving average. Once again, we are trading right at the 50 period moving average on the 60-minute chart, so, or the 15-minute chart. The 50 EMA on the 15. I think it looks like it's going to hold. So now the question here is whether or not the Japanese yen is holding. So assuming that the Japanese yen is starting to show weakness, that'll actually confirm dollar weakness. Okay, so just got to be patient here and let this market kind of evolve. Got a nice little shake out there. That's all it was. This right here is the pound dollar. You can see how we're actually breaking above a key resistance. This is a downtrend line resistance, and now we're sitting at a nice uptrend. We have uptrend lines that are sitting right underneath us. So I like what I'm seeing there in the short-term point and figure chart there for the pound. I'm going to take a quick look at the long-term stuff. The long-term stuff, you can see that we're at a long-term, we were sitting at a long-term trend line there at 126 and change. And the market has been rallying ever since, okay? So this is, I don't typically buy into the Brexit talk. I think it's kind of already baked into the cake, in my opinion. But the most important thing that I want to really pay attention to is the higher highs and higher lows, or lower lows and lower highs. I think that's really what matters, quite frankly, to us as traders. The other stuff we could get into, like debates about, we can always talk about that for the sense of you know, what may happen. But at the end of the day, the only thing that really matters is price action. Whatever the price is doing, that's really what I want to focus on. Let's go take a quick look at some of the longer time frames here. If you're looking at your pound dollar, so this is what's been on my mind for quite some time here. So this is a monthly chart on a line. This is a line on close monthly chart. Okay, so really what doesn't matter, or doesn't really matter, but what I want to do is take a look at this low going back to 2016, then measure the fibs from that low to the high of 2018 in January. So what I'll do is I'll go grab my fibs here and show you why I think that the pound dollar is holding a key level here. If you actually take a look at your monthly time frame, 32.50, okay, you can see that we're trading right at this 61.8% retracement level. So in all likelihood, that's that, in my opinion, is why the market is showing a bounce at 126 and change, and why we should probably be focusing on the long side here in the pound dollar. Okay, so even though we got a spike low for today, it looks like we're actually establishing the low of the session at this point. I think that's pretty much kind of what we're looking for here. Is you had this spike low, and then you have a bounce, and then the market's going to trail off and come back down and retest the low and hold it, and then we're actually gonna push to the upside. So the short signal that I got there a minute ago is actually running out of steam. All right, so overall, what I was looking at here in the pound dollar was a spike down just below 129 or 130, and it looks at the very least like the short signal that I got was running out of steam, especially if the market could stay above 130.40 right now. But again, I'm not really too too excited about what I'm seeing in terms of the market pushing back to the downside. Looks like overall the liquidity in the session is spiked up. So we have a lot of activity going on. I like that idea, given the fact that we have enough activity. It looks like the Japanese yen pairs are kind of pulling back a little bit. Dollar index futures is still on the low, still near the lows, should I say, trading right around 0.2% negative. You have the Canadian dollar and the Swiss franc are actually confirming that too. So dollar index is on the lows, and so is the Canadian and the Swiss franc are on the lows. So I'm wondering if the Japanese yen is actually going to start to put in a high for the day or whatnot. On the opposite side of the coin, I'm looking for looking to see if the euro and the pound, the Aussie and the New Zealand are actually going to make lows for the day and then start to push back up. Okay, so that's kind of what I'm expecting. Is even though we might actually trade in this range for a little bit, we might actually be setting up for a move during the New York session. So I'm kind of relatively cautious right now. The reason why I'm not getting short here in the pound is because it's going against my higher time frames. Okay, so I'm going to ignore this short opportunity. For those of us that are nimble, that might be a pretty decent opportunity to see if this market will go from 130.40 to retest the low at 130 even. That's a nice little 40 pip drop. But I have to ignore it because I don't think that it's, or should I say, it's going against what I'm looking at on the higher time frames. Remember, we'll go back to the pound here. Remember, the pound dollar is still trading above these lower time frames. My barometer, if you will, is the 50 period moving average. If we can stay above the 50 period moving average, I don't see a reason to actually be going short the pound. Okay, so you can see here a rising moving average on the 15-minute chart. Notice how the moving average is actually pointing to the upper right-hand corner of the chart. That to me is a signal of strength. Okay. You also have the major event here is the fact that the pound dollar came down to the 50-period moving average on the 60-minute chart. This right here is actually, if I would have been paying attention, that would have been a nice little opportunity to get long at 129.90, and we'd be sitting there at positive 40 pips. but that's okay. So what I'm going to do is I'm going to wait for this market to settle out, ready for it to base out, and then I'm going to get ready for the next breakout to the upside. The pound dollar on the 240 minute chart, you can see here that the market actually was at a breakout point, and it looks like we're setting up for another push to the upside, in my opinion. Okay, still higher highs and higher lows here, so we don't really want to be. I'm not getting excited about the downside until we can get below these key moving averages. You can see here that it looks like we hit the upper boundary of a trading range. Take a look at this 240 minute chart on the pound. Okay, so it looks like we're smacking into the upper trading range of this channel. If you connect the lows going back to the 15th of August. Okay, so the 15th of August low to the 5th of September low, and then extend that into the future, and then you copy and paste, or you copy that and then you run that across this high over on the 21st of August, and then extend it out to where we are now. You can see here that on the 29th of August we did have an initial breakout. The market actually used it as support and then failed, so that kind of validates the actual level that I'm looking at right there. So I'm looking at this being an upward trend. Now what's interesting here is that what we could probably look forward to is this market doing one of two things. Either it's going to run away and we're going to use this moving average on the 240 minute chart as a level of support, or it's going to come all the way back down to 28.50 and then use that as support. So that might actually be a better opportunity for us to get long there. So the short side, although it doesn't sit right with my moving averages in terms of it being at the upper end of this channel, might actually set up for a decent push to the downside now that I'm re-looking at it. But I don't know. I'm just going to hang tight until I get at least some sort of a turn on the lower time frames. Like, I would first need a push on the okay, so this is a British pound. You can see that we're actually pushing below the 50 period moving average on the 5-minute chart. This is the first step that we would need for a downside move, and then after that I would need it to actually break below the 50 on the 15-minute chart, but significantly I would need it to actually go below the 50 on the 60-minute chart. That to me is pretty important. I just can't do anything until it gets below that. A nice little question here is that you look at the dollar for the dollar pairs, but do you look at the equivalents for the other side of the trade? The equivalents, I'm not sure what the equivalents are. Are you talking about the exotics? That's kind of what I would be interpreting it as. So just to give you an idea, if you're talking about the exotics as the equivalents, no, equivalent to the DXY. Oh, so you're talking about like, you're talking about possibly like the dollar index, or like the cash dollar index. So one the DXY equivalent for the Japanese yen. No, I don't particularly look at anything. The only thing that I really look at is the dollar index futures contract, and sometimes I'll look at the dollar index cash market. I may not be understanding the question. That could be a possibility, but you know, I guess you would say the equivalent for the Japanese yen. The DXY equivalent for the Japanese yen. That kind of confuses me. When I'm taking a look at the majors here, and I'm thinking about the Japanese yen. The Japanese yen is just a component of the dollar index. And so that's why I look at the dollar, and then it's almost like a the application of Dow theory, where if you're looking at the stock market, everybody looks at the Dow Jones Industrial Index. They also look at the the S&P 500, and when they're looking at that, they're looking at the components, right? So they'll look at the components, which are their sectors. So they'll look at their sectors to understand like which sectors are moving the index. And that's primarily the focus here, is to look at the dollar index and then look at the components to figure out which ones are moving the dollar. And so, in other words, the idea is if the dollar is moving, then what's moving the dollar, and then find out what's moving the dollar so that way we can figure out what instruments we should be trading. Because just because the dollar is moving doesn't necessarily mean that you should be trading like all of the different subcomponents for that matter. Yeah, you could definitely, yes, you can change, you can. So that's pretty much what we do. I didn't. Don't worry about that. That's why I was all confused. The question, if you know, don't worry about that. Yes. So the idea is to look at the overall dollar index, and then look at the individual currencies to figure out which one is the strongest and which one is the weakest, and then trade those pairs, or trade the equivalent, trade the pairs that correspond to that. So the idea is that you want to be long the strongest, you want to be short the weakest, and given the fact that we have the ability to trade up to 27 different currency pairs, we want to focus on the ones that are showing strength and showing weakness overall, as opposed to the ones that are not moving. And that allows us to stay, I guess you would say, to use our money properly is what I would say. All right. And that goes back to why the first thing I do, let me just bring this up here again. One of the simplest ways for me to get an understanding about which ones are strong and which ones are weak is to take a look at my performance, or the net change, the performance of the actual currency pairs. All right, so again, you start with your watch list, and you can see here that the dollar is a part of the list because I need to figure out where the dollar is, what the dollar is doing at all times. So usually what I'll do is, the first thing I'll do is I'll look for the dollar on this list. And then I'll try to figure out, like, okay, well, the dollar's down, so what is dragging the dollar down? And if the dollar is down, I want to see if I can confirm the move. Is it a robust move, or is it a fake out? And you know, back to the currency correlations, if the dollar is down, I can see that the Swiss franc and the Canadian dollar are down, and so that lines up with it. The only reason that the thing that's out of place here is that the Japanese yen is up. Okay, so typically, remember, back to the dashboard, is that if the dollar is down, I want the Swiss franc, the Canadian, and the Japanese down, the Japanese yen down. In this scenario, they're not down. On the opposite side, what I want to see is the Euro, Pound, Aussie, New Zealand to all be up. Okay, so the dollar's down. So let's go look for the. Here's your pound is up, Euro is up, New Zealand is up, Aussie is up. Okay, so this is a robust dollar down move. And at least when we were signing on, that's when I was looking at it. So at that moment in time, when I was looking at this gave me a clear indication that the markets are moving, or at least the dollar is moving, and I need to be not looking for fake outs. I need to be focusing primarily on getting involved with a dollar short play. The one thing that I can tell you, though, is if we go back to the dollar index futures, remember that when we came in, we were talking about the fact that the dollar was coming down into support. And so the fact that the dollar was coming into support was giving me an insight that what I was looking at maybe done. In other words, this dollar down move could be complete, and that the dollar could start to go back up. And sure enough, at this point, it has been rallying off of the lows. So when I took this picture, it was down 0.2%. Now it's only down 0.1%. And you can see that the dollar is actually gaining a little bit of strength, and therefore that is showing why the euro is pushing down. So over the past couple minutes, well, you can see here that the pound dollar is not going down, which is really good, but the euro is. And the euro is the biggest component of the dollar. So if you're struggling out there, if you're new to trading, or if you're having, a little bit of a difficulty trying to navigate, what you want to do is you want to start with the dollar, and then just basically follow the euro, because the euro is the biggest component of the dollar index. And if the dollar it's basically almost a complete negative correlation there. So if the dollar goes up, the euro will go down. If the dollar goes down, the euro will go up. And that's really bottom line. That's about as simple of a trading method as you need to allow us to ignore the algorithms, to ignore the news, to ignore the chart patterns, and just focus primarily on price action and focusing on the intermarket analysis. That's, in my opinion, is probably, again, along with the trend, support and resistance, the intermarket analysis is very vital, and it helps you kind of stay on the right side of the trade. The other principle that I would employ is multiple time frame analysis. That's another vital component of what we do here. So it looks like the dollar actually came down to that trend line and used it as support. So that's putting it, it definitely slammed the euro, that's for sure. I guess the next question is whether or not we're going to be able to actually hold any of these levels, like the 116. Again, my backbone here is in the euro, holding the right shoulder of the reverse head and shoulder pattern. DAX got slaughtered. Yeah, I can imagine. I can imagine that basically every market in the world got pummeled just now when the dollar held. That's why I think, like, you know, for all intents and purposes, really the backbone of every market, you know, if you really want to know what's going to happen in your market, you really want to be paying attention to the dollar index, because the dollar is king. And I don't, you know, we can get into a lot of debate about how, you know, all the policies and all the discussion about whether or not the dollar is going to be king for a long time from here on out, whatever. But we can't ignore the fact that it is, you know, it's the biggest reserve currency now. So everybody uses it for a form of safety. And I would encourage you, if you're looking at the DAX, if you're looking at the Nikkei, or whatever market it is that you're looking at, I don't care if it's stocks within the DAX for that matter, you want to be looking at the dollar no matter what, and analyze the dollar and keep an eye on what the dollar is doing, because the dollar is basically what, in my opinion, is moving every single component of the known world. You know, and this isn't to get into this whole American exceptionalism type of crapola. I really don't care about that. All I'm just saying is that the reality is that right now, everybody uses the dollar as a reserve currency, and it impacts every single thing that we do. So aside from, you know, trying to you know, get away from all the rhetoric and all the political debate and all that kind of stuff, I don't really care about any of that. All I really care about, and the reason is, I came up to this conclusion when I was trading stocks, for that matter, is that the you know, I was trading S&Ps, and this is probably about 10 years ago. I was trading. This is when I figured this out, or at least this is when I decided to actually focus primarily on the dollar. Was that I was trading the S&Ps, and then I was noticing that the euro was doing the same thing as the S&Ps. And I mean, it wasn't tick for tick, but it was pretty close. And it was like, oh, okay, well, I'm trading the S&Ps. I need to be paying attention to what the Dow is doing, because those two move in lockstep. But at the same time, I could pay attention to what the euro is doing. And the euro, okay, fine. So then everybody starts talking about the take a look at oil. Okay, start taking a look at gold. Okay, so all those things combined, and I started to notice kind of them moving in one direction or another. But then I didn't realize that the anchor, or the backbone of all that movement, is really the dollar index futures, and the dollar index cash, the exchange rate, whatever it is. But if you sit there and you literally have the dollar up, and you use it as the backbone of everything that you do, then you'll start to, in my opinion, you'll be able to ignore what you're hearing on the news. You'll be able to ignore all this stuff in terms of paying attention to the economic data releases. You'll be able to ignore practically everything that you thought that you might have been paying attention to in the past. You'll be able to let go of everything, and then only focus on the dollar, and then pay attention to the correlation that the dollar has to other markets that you'll be trading. So even though we don't trade the dollar, we analyze the dollar and then use that to trade the other markets that we trade. So here we are looking at the pound. This is the euro that we're looking at right now, but I want to go back to taking a look at the pound, because the pound is actually finding a level of support that we can that I'm focusing on. You can see how the market came down very aggressively at 129.95, came up, bounced, and then the actual intermediate low here is at 130.23. Okay, so as long as we can stay above 130.23, I'll be looking for more upside, and I'm waiting for a signal to get long. All right, I do think that we could trail, and actually, I still think that we could actually push our way back down towards this 130 area, but I have a feeling that in my gut, or should I say just kind of my suspicion, is that we're going to use that 130 level for support, and then that we're going to get a setup that we can actually, or that I can trade. I'm going to get a setup that I can actually lean into, that I can size up on, that I can actually get big and see if I can ride a bounce off of the 130 area, and then see if this market will push up. Now, again, the nature of trading is that we can be wrong, and it does happen all the time. But we don't want to. That doesn't really. That doesn't sit at the front of your mind here. Okay, so if the market decides that it is going to fail there, then that's what we are managing risk for. Okay, so I'm watching the euro as well. The euro is trading right at 116. It's right out the initial breakout point. Let's see here. Okay, so we have this breakout point. If for some reason, is it this one? I think, no, wait, hold on, let's see. Yes, it's over here. This is the breakout point. But what I'm trying to figure out here is if this euro can go back above the 50 on the 5. Okay, so the 50 period moving average on the 5-minute chart, then that's going to be nice. I'll be looking for that to happen. And then, of course, the pound dollar. But the other thing is I'll be watching the Japanese yen. We need to focus on the Japanese yen. Okay, the Japanese yen did get pounded off the highs there, 111.50. I'm looking for weakness in the dollar. Looks like the Canadian dollar got a little strength there. For some reason, my the dollar chart here is not really cooperating. Alright, wouldn't you know? How about that? It looks like we came down to last week's low. Okay, so on this chart, it looks like the dollar came down to it's right about last week's low, and then it's finding support. Alright, so that's one thing to throw in there. And the other thing, of course, is the fact that the dollar came to this trend line and is bouncing. Okay, so it came down to this trend line, and then we got a nice little bounce here. This chart is not updating for some reason. Let's see, where can I go? MACD. Go take a look here. Okay, you got Canadian dollar strength. That's, and then this is it right here. Okay, so Dollar index futures off of the lows here at 94.88. Currently trading right about 95.11. 95.13 was the last intermediate high, and it looks like the market is actually doesn't want to it doesn't want to go back below the 50-period moving average just yet. Okay, so you see that we've had a nice bounce off of the trend line that we have been looking at. Okay, so the dollar is showing strength. Euro has been getting pounded here. Where's this low? Where's this low? There it is. Alright, so until we can get below this trend line here, the dollar, until we can get below this big trend line down here, that looks like that we're going to get some more dollar, we're going to get some euro weakness. I'm most likely going to get some dollar strength, of course. Dollar strength is, so like I said, okay, so here's the trend line that I'm looking at now. It's a really minor trend line off of the 5-minute chart on the dollar index futures. And once we break below this trend line, that's going to give us the insight, or probably a little bit of a heads up, that we might start looking lower in the dollar. And then the big break is where I want to look for a big break of this trend line down here. If we can get down there, then that's going to set up a nice little move. So that might not happen until later. Just have to be very patient. Very patient. Yesterday, the move came during the New York trading session. That was actually a really good move. So it came on. It came after I finished doing this video, and then today it looks like that's going to be the same thing. That, you know, the market has a tendency to establish a level or a high or a low, and then goes off in the opposite direction during the New York trading session. So Pound dollar is starting to look more and more like it was just a shakeout. Looks like the Aussie Swiss is doing something funny. Let's go take a look at the Aussie Swissy. Pound Aussie is another one. So Aussie Swissy is on the lows here. That's setting up a nice little trend there. Aussie Swissy looking very weak. Still though, it's a slow mover. I wouldn't say slow mover, but the range that it trades is relatively small. I don't really trade the Aussie Swiss on an intraday basis. It's a pound Aussie. Let's see what the pound Aussie's doing. See, now the pound Aussie looks like it had that spike low and that it is already starting to work its way up. Now, is that good for the pound dollar? It looks like it could be. You can see here that the pound Canadian dollar is already back up. Looks like it's okay. So the pound Aussie, pound CAD. Where's the pound Swiss? Pound Swiss is going sideways here. Hasn't been able to break above this intermediate high at 127.12. Pound New Zealand. Pound New Zealand looks like it's sitting right at that intermediate high, so we need it to get above 2, the round figure at 2. Pound yen. Pound yen looks like we need it to get above 145.41. You see that it's all in this trading range. Okay, so doesn't look like the pound dollar is really doing anything right there, right at the moment. It's like the liquidity on the session actually went bust. Everything kind of went quiet there. even though the market gave that kind of a big spike down on the data release, the question is whether or not that was that'll be the low for the day. If it is, I wouldn't be surprised if the market goes and tries to retest it. Okay, so there's going to be, I think, opportunities to take advantage of it, of that low, whether or not the market is going to break below it or use it as support. If the market uses it as support, which is what I'm thinking, I think then the idea is probably to wait for the market to kind of drift down towards that low and then start to actually find the buyers, which may not actually turn up until the New York trading session. So, you know, you can see that we're about 20 minutes to the top of the hour, and this is probably about the time where you're going to start to see folks in Europe and London start to go to lunch. So I don't think that you're going to get any kind of activity right now. Again, the focus here, let me show you something real quick. when I'm looking at this this dashboard here, all right, so what you want to do is, obviously, you want to take the list that you have, and then you want to get everything sorted on a net change basis. So of course you can see this is the list that I trade, and then what I do is, all I do is pay attention to the net change. I don't pay attention to the price. I don't pay attention to anything else. You can imagine how many different columns I could have here based on all the various technical factors that we can introduce. But the most important component here for me is to pay attention to the change from the previous session. This allows me to determine which markets are strong and which markets are weak, which ones I should be paying attention to and which ones I should be ignoring. And the other component, though, is to be able to gain an insight into the amount of activity in the markets. So when I'm actually looking at these markets, in this particular situation, you can see that the pound yen is up almost 0.7, it's just above 0.7%, right? And then the weakest market is only down 0.2%. When I see some of the best moves, or should I say the best times to be trading, for me, the market in this list will have multiple markets that are above 1% and down -1%. So if I'm glancing at this and all I see are markets that are, you know, within 1% of positive or negative, then I have a tendency to sit on my hands, or what I'll do is just kind of play it really conservative. So this image was taken at the beginning when I started to record the video, but if I were to glance up at the current reading on the markets, it looks like the strongest currency pair that I have is the Euro Yen at 0.3% positive, and then the Aussie Swiss is the weakest at -0.2%. So the markets are really just stable here, not really doing much. And I think this is really important because a lot of times everybody's looking for something to do, and I think this is what separates a lot of the folks out there, between the ones that are struggling and the ones that are they have a better. You have to have an anchor, something that you can use in order to determine whether or not you should be sitting on your hands or whether or not you should be active. And for me, this is probably the best indication that I've ever been able to come up with, or that I've ever been introduced to. One of my back in the day, I had a mentor who basically was very adamant about us doing this kind of a sorted watch list where, at the time we were trading stocks. I was trading stocks very actively for a prop firm. And when we were trading, we were encouraged to take the watch list that we had been given. That we had a small universe of stocks, and in this list of stocks, we had to have a sorted watch list where we were actually paying attention to the percentage change based on the previous day, because we were day traders. We were pure day traders, and the important thing was to know which of the pairs had been moving, or which of the stocks, which stock had been moving and which one had not been. So knowing what I know now, that was probably one of the best tools that I ever had, is to just pay attention to, first of all, the one that is the strongest, and then the one that is the weakest. You pick the one that is the strongest to go long, you pick the one that's weakest to go short, and that at least gives you something to do, for the day, or, and if it continues to be the strongest, then you know that you're in a predominant uptrend. If it continues to be the weakest, then and you're in a predominant downtrend for that particular market. The second part of that sorted watch list was when all of the markets in the watch list had been moving above or below 1%. If all of the strong pairs, or if all of the strong stocks had been stronger than 1%, and all of the weak stocks had been below 1% negative, then you knew that you had a crazy day on your hand. You had one component, is one thing to think about, is that you could have traded any market and you would have been making money practically on any pair or any market. The other thing is that you didn't have to discriminate. It didn't matter what market you picked. You'd be able to do anything in that market, and then you should be able to make money. For today's action, it looks like you have to be selective, of course. It looks like the yen was the pair to be long, or at least it's showing its strength. Over the past couple of minutes, over the past couple of 30 minutes, we had this push down in the pound dollar, but the pound dollar has not continued that push to the downside. And given the fact that the pound did not push dramatically back to the downside, tells me that it was just a fake out. Okay, so I'm going to be looking for the pound here to probably establish a base, and then probably look for it to build strength and then head back to the upside. That is probably the same thing that I'm looking for in the euro, where the euro is coming down to a level of support. The dollar index, I can't imagine it maybe breaking that trend line at the moment, but in my opinion, I have a feeling that the trend line at the bottom of the chart is going to be broken. But in all intents and purposes, when I look across my dashboard, a quick glance looking at last week's levels, we're pretty much in last week's trading range. When you take a look at the dollar index futures, you are still trading within last week's trading range. The Swiss franc, the Canadian dollar, the Japanese yen, it's all trading inside of last week's trading range. So we're still waiting for this market to probably establish itself. Now, there's probably a lot of reason out there. I mean, there's reason to believe that that back to the calendar. Okay, so we have we have some important economic data releases that are supposed to be out this week. In terms of, we have the The bank rates, the pound rate is due out Thursday. And so in between now and then, we could actually be looking at some more doldrums, which means that we're in a scalping environment. Don't really expect the market to actually get any kind of a move until then, I guess. But still, that could have been that test down at 130 in the pound could have been, you know, the shakeout that the bulls needed in order to get rid of the weak holders. And because of that, we'll have to be paying attention to whether or not this market is going to continue to hold strength. So let's see what's the high for last week is at 30.28. We're trading right around 130.28, and if we continue to stay above last week's high, then that's going to encourage more buying. And I think that you know, the next level after that is going to be the week before that, 130.43. So we need to stay above 130.43 to have a clear breakout. Euro, my expectation here is that if we could stay above 115.24, I think that's going to set up for a nice move to the upside. Okay, 115.24 in the euro is pretty important to me. And then the Australian dollar, once it's at 70.98, so right about that 71 even area. Well, keep an eye on that kiwi. Kiwi looks like it is unable to gain any footing here, so looks like the euro is getting slammed again. Okay, so right down through 116 at this point. All right, so once again, now, given the fact that the euro looks like it's breaking here, we're going to take a look at the multiple time frame analysis for the euro, and let's kind of get our marbles together. All right, so once again, the euro is right back at support. Here we are trading at the 50 on the 60. Okay, so this should actually hold as support. Go take a look at the 15-minute chart. The 15-minute chart is down below the 50. Take a look at the 4-hour chart. The 4-hour chart is actually below. It could be. It's trading right at the 50. So the euro may be setting up. I think I'll have to jump on the short side if we go below the 60 on the 50, because the market is below the 50 period moving average on all of my time frames. Okay, so we got the 50-minute. Here's the 5-minute chart. I'm starting from the bottom. 5-minute chart, we're below the 50 period moving average. 15-minute chart, we're below the 50 period moving average. 240 looks like we're actually pushing right below it. And then the 60 period is the only one that we're sitting at, where I'm watching. If we cannot hold this, if we continue to trade below the 50 on the 60, or if we push below that, then what I'll do is then I'll start using the 50 on the 5 in order to for resistance, to see if I can find some levels here to get short. I love having the confluence, because that's definitely what helps to eliminate confusion for me. It helps me stay on the right side of the chart. So again, I don't mind waiting for the markets to actually set up, because once they do, then you can actually ride the trend, sometimes for very long periods of time. And I think that's kind of really where we make our money, is when we sit and wait for the market to actually set up. So at this point, that is what I'll be paying attention to. Okay, overall, we're just still sitting now. Again, 1596 down to the low at 1524. I think that's plenty of room there. And again, this is a scalping type of idea. My big picture view is that if we can stay above 115.24 right here at last week's low, then I do expect this market to go higher. But in the meantime, at least for the moment, who's to say that we can't go back down, you know, as deep as 115.40, 115.30, and then shake out all the week longs and then start to turn back around. So with that in mind, that could give us something, you know, kind of short term to trade on. And again, the liquidity level is has gone quiet. Keep an eye on this pound dollar, because I do think the pound dollar is basing out. The pound dollar is actually doing really well here. You can see that the market is unable to go below the 130.23 area. So as long as we can stay above 130.23, I think this market is actually setting up to go long. If we can get back above the 50 on the 5-minute chart, then that's going to be enticing. Let me go take a quick look at the pound dollar here on my multiple time frame analysis. Okay, back to the okay, so remember the 5-minute chart, we're just below the 50, but it looks like we're gonna push above it here within 10 pips. The 15-minute chart looks like we're right there. We could be pushing back above the 50 period moving average, so we're getting close to setting up there. And then of course, remember, we held the 60-minute 50 period moving average. We held that. That was the test of support. So of course we're above the moving average, and therefore our bias is to the upside. That's the anchor. And then of course on the 240, we're above the 50 period moving chart. So the pound dollar is setting up for me on the basis that we're actually showing strength, albeit what I would say is that move that we had to the downside was nothing but a fake out. So I'm loving it. I like what I'm seeing here. I'm thinking that if we can just get a signal now, I'm starting to get the preliminary signal that I'm looking for in terms of, like, you know, if you're familiar with Hakanashi, I'm starting to see a bullish Hakanashi on the 5-minute chart. So I'm liking what I'm seeing. I'm also seeing the 5-minute momentum start to you know, it actually based out, and now it's starting to go back up. But again, I still don't have a signal yet. Right now the market is just kind of in the preliminary, it's just chopping around here. So we don't, I think that we're not going to get anything until New York opens up, and that should be happening here within the next couple of hours. Keep an eye on that euro, because that euro just continues to drift. Okay, so, and if you're noticing the euro going down, the pound going up, that is choppy for the dollar in general. All right, so that would confirm the basis for the dollar going sideways. When you have the pairs that we look at across the dollar index, dashboard. Let's go take a look at the dashboard. And when you see that the pairs are really not doing anything like they are now, then you have to be very selective. So again, I don't mind the scalping. I like it, but there has to be a really defined basis. I prefer to look at trends in order to get involved with trends. Looks like the pound yen, the euro yen, Canadian yen, Swiss yen, New Zealand yen, USD yen, they're all on the highs here. Or at least they're the strongest pairs. So if we're looking at one major pair to be trading, the Japanese yen on the bullish side would be where we should be focusing. So once again, I wanted to say, just keep an eye on the euro. It looks like it's setting up to move lower. It looks like the pound, I'm still kind of on the fence there, not really sure what to expect, just kind of waiting. And again, we still have the interest rate announcement out of London coming in a couple of days. It looks like the activity level is going to start to pick up once the New York trading session gets underway. But in the meantime, I'm going to sign off and basically see if another setup's going to come in and present us with an opportunity here. So once again, if you are out there and you like the videos, please do not hesitate to hit the like button. Also, give us like I was saying, give us a thumbs up. Subscribe to the channel if you think that you'd encourage us to show more of these streams, and at the very least, you can check us out. If you have any questions, reach out to us there at GarciaResearch.net. Mail at GarciaResearch.net. This is Andy Garcia signing off, and I hope it's been very helpful for you, and I look forward to seeing you at the next update. Have a good day.